So traditional financial analysis, where we're just doing some ratio analysis and seeing what's happening to the financial numbers, the cash flows, the profits, that in its own self is not sufficient to get a holistic picture of how the company is performing. It has its limitations, like we covered in the video. And there are certain models which have been developed to overcome those limitations and allow us to do a more comprehensive analysis of a company. One of these is Kaplan and Norton's balanced scorecard. What the balanced scorecard does is it attempts to analyze a company from various different perspectives, to look at things internally and externally, to look at things from a historic standpoint, from what happened in the past to the present to what the future seems to look like, right? To look at things from people within the company to people outside the company, stakeholders within the company, stakeholders outside the company, right? To look at things from a financial standpoint and a non-financial standpoint. So trying to cover pretty much a whole spectrum, a range of different perspectives. Broadly, these perspectives are categorized as 4, and they follow a specific logic. So a company must adapt to its external environment to learn, grow, and add value. And this is where we get the learning and growth perspective, which looks at how well the company is adapting to changes in its external environment, how it's learning from those changes and growing as a whole. The organization needs to improve its usage of resources and its efficiency of internal processes. So in order to change with the times and stay competitive in the market and up to date with this external environment, the company needs to improve the usage of its internal resources, such as its assets, its staff, and so on, and also its internal processes, right? And this covers the internal perspective. After that, this helps the company improve the quality of its product and services and add value to the customers. So this gives us the customer perspective, right? How do the customers view the company? And all of this, if done properly, will eventually result in the customers buying more, improving the company's revenue, profits, and cash flows, which is the main aim of the company, right? And this covers the final perspective, which is the financial perspective. So 4 different perspectives, and they're split up into different parts. So let's just look at these in a bit more detail. So we have the learning and growth perspective. Broadly speaking, if you wanted to summarize this perspective, it looks at how can we as a company improve and add value and adapt to the external environment. And in each of these perspectives, we must have certain critical success factors that we need to achieve and certain key performance indicators that we use to measure our performance with regards to each of these perspectives. So learning and growth can be broken down into 2 parts. Learning as an organization, this could have to do with training our staff to improve their learning, or learning as an organization as a whole and growing by introducing new processes that work better, or new products or new services. So examples of performance measures or performance indicators for this perspective would be revenue you gain from new products. Sometimes people say the number of new products launched, but that's not necessarily good to indicate growth, because a lot of new products might end up being failures. So to check whether the new products are successful, we should assess the revenue we obtain from them or the profits we obtain from them. And training hours of staff, again, this can help you assess how the staff is learning. Once again, just because they're going on trainings doesn't really mean they're learning, but it could be a certain particular type of metric. Of course, you need to look at if the staff actually improves in its operational efficiency as well. Then we have the internal perspective, which looks at how well we're utilizing our internal resources, such as assets and workers, and what areas or processes we're excelling at to obtain the competitive advantage to learn and grow. So resource utilization percentage, like capacity utilization for a machine or an asset, or staff utilization, right? Those things could give you an idea about how well you're utilizing your resources. Another KPI could be staff motivation based on surveys, to take surveys from your staff and get feedback from them on how motivated they are, how likely they are to stay with the company, and so on. Then we have the customer perspective, which looks at how the customers view us. We can gauge this through customer feedback or surveys. We can gauge this through percentage of repeat sales, right? If the customer is coming back over and over again, obviously they like our product. Or customer retention rate. If we're keeping our customers for a long period of time, they're not leaving for our competitors. Again, that means they're happy with us. Then we have the financial perspective, which looks at how our performance is for our shareholders who want profits and dividends. So you can assess this by the profit margin, the dividend yield, the revenue growth percentage, something like a ratio like the ROC, etc. So for each of these perspectives, we highlight what the key success factors are that we need to achieve, and then we set certain performance measures and measure our performance against them. So as you can see, this covers the whole spectrum. So you have the financial perspective to cover financial things, but then you're also looking at non-financial things like how the customers feel, how your internal processes are operating, how you're learning and growing. Then you look at some historic oriented perspectives like financial data is from the past, our resource utilization, etc. will be from the past, but you're also looking at the future with the learning and growth perspective or the customer feedback. For example, a company can be very profitable right now, but if the customer feedback is negative, that means that in the future those profits would be expected to go down. So you have a more future-oriented approach as well as looking at the past. And you're covering things from an operational standpoint, internal standpoint, but also from an external standpoint by looking at the customers, looking at the external environment. So you're covering a broad spectrum. So let's apply this with an example and illustration just to understand how this would work. So let's consider an academy, right, which teaches professional qualification courses. So how would their balanced scorecard look? So you'll have each of the perspectives, and you'll have some critical success factors for each of the perspectives. So for learning and growth, maybe the main success factor you've identified is you need to adapt to the market because it constantly changes. New professional qualifications are offered, right? And new different exams are offered. So one way to assess how well you're adapting to the market could be the percentage of revenue you make from new courses that you launch. So out of your total revenue. So this should be, for example, maybe 10-20%, right? And the reason you need it is obviously you need to respond to changes in the market. You can't be complacent. And by constantly adapting to it, you can look at untapped niches, right? Maybe a new professional qualification launches and no one else is offering courses for it. If you tap into that niche and launch a course for it, you get the first mover advantage and you increase your revenues and profits and enter into a new niche which your competitors have not. Then you have the internal perspective. Maybe your main success factor is resource utilization, because remember, an academy mainly it's a service organization. So you need to make sure your workers are used well, that they're not sitting around. So your tutors, your lecturers should be utilized fully because you're paying them a fixed rate. You need to use them as much as possible. So you can assess how many days are they teaching for each month, each year, right? Or classroom utilization rate. You're usually paying a fixed rent on these classrooms. You need to make sure they're constantly being used and utilized, so they're not just sitting there empty while you're still paying rent, right? And if you utilize your staff and resources properly, you keep expenses low and your profits high. Then you have the customer perspective. You might need to be flexible because customers always value that in this day and age, and you need to obviously have a high quality service. So flexibility can be based on the percentage of classes offered online, right? If you're offering different variations so that they can attend a class, but if they're not able to attend, maybe they can do the online class. Quality can be assessed through the exam pass rates, for example. And if you're flexible, you'll attract more customers. And if you have high quality, you'll retain your customers and highlight why they should choose you over your competitors. And then the financial perspective, one would be maintaining liquidity, because you need to have a good cash flow, which you can look at through the day sales outstanding, collecting receivables on time, maintaining profitability, which you can look at from a profit margin standpoint. And obviously these are self-explanatory. You need good liquidity and profits to stay in business. So that's an illustration about how the balanced scorecard would work. Now, despite its holistic view and its advantages, we must also consider its disadvantages as well. Okay, let's cover both. So the advantages are, like we said, it covers a wide range of outlooks and perspectives, gives a broad focus, and there's less of a chance of missing out on some critical stuff, which you would if you had just traditional financial analysis, like you'll ignore the customers completely. It's more difficult to manipulate because there's metrics across various areas. So even if someone manipulates one metric, he won't have the power or even the responsibility to manipulate another. You consider the external environment, the long-term perspective, strategic outlook, unlike the conventional financial analysis, like we said. And the balanced scorecard is flexible. Obviously, you can change the critical success factors and KPIs over time to as your needs evolve. Disadvantages though. One, it might lead to a lack of focus because now there's so many areas. So if you have 10 different KPIs, you might do very well in 4 of them, average in 2 of them, and poorly in 4 of them because you just don't have enough resources to focus your attention in excelling in all those areas, right? It can dilute your focus. So you might do very well in certain areas but ignore other critical areas. And it's always difficult to determine how many metrics are enough. If you have too few, there will be gaps and you might miss out on critical areas. If there's too many, there's lack of focus and confusion. And to align all these perspectives, metrics, and critical success factors together, for example, to improve customer perspective, right, like quality or something, you might have to incur certain expenses, but that would compromise your financial perspective, your profitability. There can be conflicts between different perspectives, different KPIs. So you need to try to make them cohesive and working together rather than conflicting with each other. So that's how the balanced scorecard works. It's quite a popular model these days in real life, and you can see why because of its advantages, but do keep in mind that it has these disadvantages as well.